Hi everyone, and welcome back to part 3 of my introduction to insurance. My name is Rebecca and I am your insurance lady. Now today I'm going to discuss some elements of risk. Before we can talk about risk, we need to fully understand what risk is. It's very simple, but sometimes people make more out of it because it's a big reason why we get insurance. What is a risk? A risk is simply a chance or possibility that a loss might occur. Now, everyone takes risks. Some may be more than others, but no matter what you do, there is a chance or a possibility that a loss can occur. Take, for example, going on a nice little walk down the neighborhood. Now, depending on what neighborhood you're walking in, the risk could have a different effect. But just by walking, you have the potential of suffering a loss. Now, I'm not trying to scare anybody, but let's keep it real. Life is real. There is a risk, chance, or possibility that you could get robbed of your goods just by walking down the street and suffer a loss. But it doesn't have to be that harsh. You could be walking down the street, trip on a crack or trip on a pothole, and you're considered, the injury is considered a loss as well. Anything could happen, and that's why you're taking a chance or a possibility that a loss could occur. You're taking a risk. Another risk that we take, and the reason we have auto insurance, is because there's a chance or possibility that a loss could occur while driving our vehicles. Now, we can get into an accident, injure others or their property. So automobile insurance is designed to deal with these types of risks. Now, there are two types of risks we're going to talk about today. We have your pure risk and we have your speculative risk. So I'm going to talk about speculative risk right now because I want to get that out of the way. Insurance companies do not insure speculative risks. So when you are taking a risk that is considered a speculative risk, there's the potential for gain, profit, or loss. Take, for example, gambling. If you're at the blackjack table, you put $100 down in chips. Depending on the cards that are dealt, you could walk away with $200 or more, or you can walk away with nothing. Now, if you walk away with nothing, that would be considered a loss. But if you walk away with $200 or more, that would be considered a gain. So you're taking a speculative risk because you have a chance for a loss, but there's also a possibility for a gain. And insurance companies do not insure speculative risk because if we did, then we'd go out of business. And if I was insured for that type of risk, then believe me, I'd be at the blackjack table all the time and I wouldn't have any worries. Now, the next type of risk, and most important to the insurance community, is the pure risk. With pure risk, there's only a possibility for a chance of loss. If you drive down the street in your Geo Metro, I highly doubt that you're doing this for the chance or possibility that someone would hand you some keys to a brand new Mercedes-Benz. This is only a chance that there's a loss might occur. The only thing that could probably end up happening is that your bumper would fall off the back and then cause an accident with the driver in back of you and probably the driver in back of them. And then in this case, your insurance company would have to pay for your liabilities if you have auto insurance. So while driving vehicles, it's a pure risk. Okay, so that's it for today. The next lecture, we are going to still talk about risk, insurable risk and risk management. I do want to thank you for watching and learning. Again, please send an email if you have any questions. My email address is insuranceladypc@gmail.com. And my name is Rebecca, and I am your insurance lady.